What's interesting about the concept of an LLC is throughout the years, we've often recommended that, hey, it might make a lot of sense for you to invest in real estate and own it through an LLC. And there really are pros and there are cons to owning your real estate in an LLC. One of the cons is that it can be a little bit cumbersome. Meaning, if it's in an LLC and you want to refinance it, well, now you have to deed it out of the LLC back into your name, and so there's different reasons why that might make sense to still own it in an LLC and to go through those steps, and so Brad is going to he's not going to take one side or the other. He's going to present the pros and the cons of owning real estate in an LLC or not in an LLC. I have some opinions on it myself. I know that Tyler does and others here at the office do. But we're going to let Brad take some time. Now, I want to tell you a little bit about Brad. I have his bio, and I'm going to share that with you. But I've known Brad almost 10 years now. He has been our general counsel for our company for nearly 10 years now. And he's represented us very, very well and has given us advice and counsel that has kept us in compliance with the myriad of laws that exist when you're in business. And he's helped keep us safe, and he's helped keep us on a good track. And he, along with his associates, have done a fantastic job. But I do want to share just a little bit about Brad. So Brad counsels clients on mergers and acquisitions, federal and state securities law compliance, forming and financing startup businesses, and real estate matters. He has extensive experience in private placements and other private security transactions, Rule 506 offerings, and corporate governance matters. He represents real estate companies in the acquisition, sale, and financing of commercial and residential properties. He represents multiple companies in private placement securities, debt, and investment contracts, represents buy and sell side entities, mergers, asset acquisitions, and other business combinations, represents early stage formation companies with their formation, financing, and contractual needs, general corporate services, contract review and preparation, transaction structuring, legal compliance, and negotiations. Before joining the firm, Brad was an attorney with Holmes, Roberts & Owen in Salt Lake City, Utah, Brobeck, Flegger, and Harrison LLP in Boulder, Colorado, Dow, Loans and Albertson PLLC in Washington, D.C., and Cadwalader, Wickersham, and Taft in New York City. He also has many honors and recognitions and is involved in many professional activities. And has been in the news on a number of things as well.
I'm going to cover a little bit of a deeper dive on entity formations and what type of entities. I was going to address trusts briefly, so that works out. I'll focus on LLCs to do or not to do, but I think it wouldn't serve you well if I didn't at least touch on some of the other entities. But at the end of the day, owning it as an individual or as an LLC is generally the right choice, but let's just go through this one by one. And to the extent you'd like me you have a question, just tell them and stop, and happy to answer questions along the way. So if you want to move to the next slide. I'm flipping back and forth between live video and my presentation. Is there a delay in the video by chance?
Brad, the delay is about probably 2 minutes, so you can just keep going.
All right. Well, I'll just. So I'm assuming we're on the slide now with my picture on it, as well as my summary. I'll give Steve gave you my long, boring introduction that gives some dates and places, but I put this picture here because, trust me, you don't want to see the real me. So I graduated from BYU in 1993. I went to law school in New York at New York University School of Law. Worked at Morgan Stanley while I was going through law school. I worked my way through college and through law school. Actually, you're actually not supposed to work while you're in law school, but like many of you, I'm sure hard work is just part of your nature, and you work hard. And I worked hard throughout my educational career. I practiced in New York, D.C., and Boulder, and I've been in Salt Lake though since 2002. So most of my practice has been here in Utah, and compared to the other places, Utah is great. I really love living here. I generally practice in corporate securities, M&A, and acquisitions of real estate, commercial, and individual as well. My most active practice is in private placements of securities and advising people on securities law matters. And I'm a partner here at Michael Best. And this personally, I'm a human. I don't look like that, but I do have human traits, as my wife may not testify, but I do. I like to scuba dive, I like to take walks, and I like to eat sushi. So that's from my personal profile. So if you move to the next slide, that's titled Main Entity Types. So these are the entity types that I'm going to discuss briefly. I'll focus on LLC, but I'm going to at least talk about these briefly. At the entity type or choice may not even be up to you. For many of you who've gone through the lending process, your lender may say, no, we're going to lend to you individually, and that's who we're going to lend to, and we don't want you to put the property in an LLC or in another entity. So your decision on which entity to choose may not be your decision in any event. So who borrows the funds? And then if you're borrowing the funds individually, the loan documents likely have a provision that restrict you from then transferring that property to an LLC or to another entity without the bank's consent. And so the bank likely won't consent anyway. So if you're borrowing the funds and you're borrowing it in your name, the decision of to LLC or not to LLC is likely already been made or being made on your behalf. So if you go to the next slide on protecting the corporate entity veil. And this is, the reason of putting properties in an entity rather than individually is generally to shelter you as an individual from the liabilities that the properties may have. The biggest way to protect yourself and your entity is insurance. So more important than a lawyer at the startup stage, or there are two people who are more important than talking to a lawyer. So as a lawyer, I'll say it's important to talk to a lawyer as well. But you should have a good accountant who advises you, because what I'm telling you from a legal perspective, from your personal accounting perspective, may not make any sense at all. So you want to talk to an accountant and find out which type of entity passed through or not to put a property in, but also a good insurance agent. Make sure that your properties are sufficiently insured, so if there are damages at one property, that we're not worried about the corporate veil because the insurance covers those damages and you don't have to worry about personal liability. So that's key. You don't have to worry about being sued and having a lawyer trying to pierce the corporate veil if the insurance covers any damages. So, and I know that the team at Done For You can introduce you to excellent insurance agents and are affiliated with various accountants that they can introduce you to the extent you don't have a relationship already. But again, those relationships are more important to me. And another reason we're talking about the corporate veil, because these different items are just elements. So if significant damages have been incurred on your property, personal damages, environmental damages, and maybe it goes beyond the insurance premium and you have sufficient properties or wealth that it's worth a lawyer to go through, they're going to try to pierce the corporate veil to get to you. And these are elements that they'll look to. You don't have to comply with all of them, but individually they'll add up to, did you do enough to make sure that the entity that holds the assets is a separate entity so that you cannot be sued individually. And to the extent you're not doing this, then whether you've LLC'd or not or other entity, it doesn't matter because you can be personally liable. So all the effort of hiring a lawyer, getting an LLC, keeping it current, holding meetings, may be for naught if you haven't followed these various guidelines. So these are, I'm kind of listing the pros and cons as we go along, not just listing one and the other. So if I'm going too fast or not come across clearly, feel free to tell me to slow down through one of the moderators there. So corporate formalities, forming the entity. On the rest of these I'm going to go through more quickly. Recommend keeping a separate bank account per entity. Once you create an entity, you can get an EIN number, tax number. If you're a single member LLC, you can still get an EIN number, even though for tax purposes, a single member LLC is ignored. But you can open up a bank account if you can't get an EIN number if the purpose for that is to get is for banking purposes. You want to keep separate books of records on each of the entities. You want to fully document all transfers of money. This is what we call commingling of funds, and you've probably heard commingling of funds very often. So anytime money goes to the property, out of the property, into an LLC or out of the LLC or whatever the entity, there needs to be an accounting record of what that money was. Is it a capital contribution? Is it a loan? If it comes out, is that a distribution? Is it income? Is it a payment for services? If you're not keeping good books and it looks like your property is just cash register that you take money in and take money out and put money in without recording, then any entity that you formed is really, you've just wasted your time and your money, because that it'll essentially be not there if it comes to legal liability. Ensuring all transactions are with that arm's length basis. Move on to the next slide. The protecting
Brad?
the veil. Yes.
We do have a question.
Yes.
If you have more than one property, are you saying that you should have a different bank account for each property, or can you put all the properties in one bank account?
Well, do you have your? It would depend. Are your properties all? When I say a different bank account, it's per entity. So if your properties are in separate entities, it likely makes sense to have different bank accounts for each property. If you've got multiple properties in a single entity, then one bank account would be sufficient.
So maybe let me clarify, Brad. I'm going to translate from legal to layman. So entity is call it your LLC. And so if you have, let's say that you have 3 properties in an LLC, Brad is saying that have one bank account for the entity, even if there's 3 properties in that entity. Does that make sense? Okay. Okay, go ahead, Brad.
Thanks. Steve speaks lawyer, and I appreciate that. I enjoy working with him as well, and consider him a friend, and have enjoyed these years of working with him. We've on a side note, we've seen each other gray, and our children go to college, and it's we've gotten old together, so it's kind of sad. We were once young, right? So moving on, the employees probably doesn't matter. You're probably not going to have employees, especially if you're using the Done For You program, because you'll have a team assisting you. But to the extent you have employees, you should make sure that there are contracts or to make that clear. If you have an entity, depending on the entity, there are formalities, officers, managers, directors. And again, depending on the entity, how formal it has to be as far as number of meetings to have will be a key item as to whether or not the corporate veil, entity veil, can be pierced or not. Maintaining separate offices. At this point, you don't have to worry about that as your empire grows and you hold more and more properties, and you may become a real managing company, and take office space, and then that would come into play. And then finally, separate tax returns. This is what you'll want to talk to your accountant about. Depending on the entity type, if you're a single member LLC, if pass-through status, there's lots there that really an accountant should discuss with you on how to file tax returns. So if you move to the next slide. Okay. So this, I'm going to go through the non-LLC entities rather quickly because for the most part, they're likely not going to be right for you, but I at least want to go through them quickly in case you think they might be. You have some questions, you can follow up with Steve or Kevin, and they get the questions to me, or your accountant, just something you could discuss with your accountant as well if he brings up these. So there's a corporation. We're going to talk about a C corporation and an S corporation. A C corporation, I can't imagine a reason that anyone would want to use a C corporation for holding real estate. C corporations are subject to double taxation. So to the extent that you have profits, the corporation has to pay taxes, and then you distribute the funds through dividends, and then as an individual receiving those dividends, you have to pay taxes again. And there are also very strict corporate formalities as far as numbers of boards. In Utah, you got to have 3 boards of directors if you have more than 3 shareholders, number of shareholders meetings. So to maintain the corporate veil, a C corporation as well as an S corporation that we'll talk about next is much tougher. And again, for real estate, I just don't see it. I represented a client that holds multiple commercial real estate properties. They're an LLC, so where they're holding hundreds of millions of dollars worth of property and still doing it as an LLC, I'm just going to skip over the C corp. So if you go next to the S corp, an S corp again is probably not likely going to be the entity of choice for you. As Kevin mentioned, you can't own S corporation stock in an IRA, so there may be a reason there in and of itself that you can't do that. An S corp can't have more than one classes or more than one class of securities. So you may be holding a property with another person, and you may want to allocate how the profits and losses are distributed, how the money comes out. With an S corp, you can't do that. An S corp is if you own 50% of the shares, then you get 50% of the profits, 50% of the losses. You can't have multiple classes. The only reason some people use S corps, they're not necessarily in the real estate business, but there is some savings on employment taxes if you have an S corp. It's for smaller stage companies, not for larger stage companies, and maintaining the corporate formalities like a C corp, very difficult. Easier to pierce the corporate veil of a S corporation if you haven't followed the formalities. So go to the next slide from S corp to LLCs, which is kind of the main focus of what we're going to be talking about today. So to do an LLC or not an LLC, one of the keys that I'm not discussing here, but if you're owning it by yourself, then an LLC may make less sense than if you're holding it with more than one person. With more than one person, having an LLC is likely a wiser choice, but there are still going to be pros and cons. And then I should also say, to the extent that you need forms, I've provided Steve some free forms, LLC agreements for single members and for dual members that are owning it 50-50. Anything beyond that, you may need further legal advice. I've given those to Steve. If you need them and they're not available easily, I could forward them to him again and get them to you. So feel free to ask Steve for those forms. No charge. But an LLC, for the benefit, tax purposes, pass-through status, you don't pay. The LLC doesn't pay taxes. The income comes through to the individuals. It's easier, especially where you hold multiple properties. It's easier to keep track of the profits and losses on the properties. If you're holding it with different individuals, then it's the governing document in and of itself. The great thing about an LLC when you have more than one owner is that essentially all of the formalities of the company will be in the operating agreement. So you don't have to know the corporate law and the corporate statute. if the LLC's operating agreement is well drafted. You'll know what your rights are for voting, for distributions, for profits, allocation of taxes, and that'll be in your operating agreement. As you mentioned earlier, the cons are all those formalities that we discussed to avoid piercing the corporate veil. If you don't do that perfectly, then all the costs of having the LLC, which in Utah isn't bad. In Utah, it's about $70 or $72 to form an LLC, and then only $15 a year to maintain the LLC. As long as you have somebody live it, you need to have a registered agent in the state where your LLC is formed. And if that's you, then it's free. If you were to form an LLC in Delaware, a lot of people say you got to have a Delaware LLC. That's not really true unless you're looking for investors. It costs about $500 a year to maintain an LLC in Delaware. So you can move to the next slide, which is really just a pause slide, so we can discuss. You all work. Everyone works hard. I put this slide up because if you're here at this seminar, it's after hours, shows your desire to work hard, and good luck comes to those who earn it and those who work hard. And so I wanted to just compliment you on being here and showing that you've got a good just taking the step and looking for alternative ways to earn income is a kudos to you. Move to the next slide, if you would, please. And this is on individual ownership. So this is very, very common. And again, for most people who need to borrow money from banks, this may be your only choice to hold it individually. If the bank lends the money to you individually, then unless it's a very strange loan agreement, you're going to hold it, and it would probably be a breach of the covenants of the loan documents to transfer it into another entity without the bank's consent, and banks generally aren't going to consent to that. There is additional liability potentially if you own it individually. If you've done everything perfectly and you've maintained the corporate veil, then you are limited to your investment in the property. People can't sue you beyond the value of the property. And if you hold it individually, if you own all of your properties individually, if lawyers are trying to decide to sue you for more than what the insurance covers, then it's easy to search the property records to see if you have a lot of properties. If you have a lot of properties and they're all in your name individually, then that may put a larger target on you to be sued. Whereas if you hold it in different LLCs and your names aren't tied to them, then that may be less likely. Rental income is owning it individually is just the simplest and easiest way to do it, as long as you hold it individually by yourself. You just record it on part of your taxes, Schedule E. And that's for your accountant to work through with you. There may be tax issues on that. Biggest benefit is it's just simple. No additional legal costs. You don't have to have a lawyer help you set up documents. You don't have to annually renew. If you don't renew your LLC in a timely fashion, or any entity, in Utah, the entity will be automatically dissolved, and then you're owning it individually anyway. So you don't have to worry about all of those. So simplicity. Another benefit is just it's easier to obtain financing. Banks like to lend money to individuals that they can look at their financial records, look at their income, know that if there's an issue, that the individual is going to be more likely to make the payments to protect itself and its other assets than if it's an LLC where its losses can be limited to what's in the LLC. So, again, the bank may, and in most cases, makes the decision for you as to who they're making the loan to. The next item I'll talk about are trusts. If you want to move to that. So I am not a trust and estates attorney. And if you want to put your property in a trust, you should speak to a trust and estates attorney separately. And there are, generally it's not recommended to put it in a trust, but that's just for ease of purposes. If you're setting up a trust for estate planning purposes, then it could be a good idea, as long as you've consulted a good trust and estates attorney. Trusts are fairly easy to create. If you're not borrowing money, if a bank is willing to lend money to a trust, and that's one of the drawbacks of a trust, is that banks often aren't willing to lend money to a trust, and you can't, just like as I said before, you can't buy it in your name, borrow the money in your name, and then transfer it to a trust. At least it wouldn't be a legitimate transfer. It could be avoidable if the bank by the bank because of the covenants. But for estate planning purposes, if you have an estate attorney that says that's right, and then it's simple to then transfer the ownership of that property, because in order to transfer the ownership of the property, all you have to do is make an assignment of beneficial interest. So you're not transferring the property, you're just transferring the beneficiaries of the property. So in that case, it could be better than also upon your death, it can avoid estate and going through probate, and that the trust in itself would say what happens upon the death of the owner. So I just the next topics. Just wanted to talk briefly about taxes. Sorry, go ahead.
Okay, we have one more question for you.
Okay.
So you can't take out a loan for a piece of property in your own name and then move it to an LLC or move it to a trust? I thought you could do that.
Now the way I'm answering the question based on what most loan agreements say. So you'd have to look at your loan agreement, generally under negative covenants. What can't you do with this property? When I bought my house, it said I can't transfer any interest in the property to any other entity without the consent of the bank. So you need to just confirm what your loan documents say. If you, it may be, if you're filling out the loan and it's for investment purposes, make sure that that provision isn't in the loan agreement, or negotiate with the bank to see if you can have it removed and say you want to move it to this LLC after you've purchased it. But if that agreement is in the loan agreement that says you can't transfer it, and the bank does an audit, checks on the property and sees that it's been transferred, they could call the loan due as an event of default. Just some additional diligence to do just to make sure that it's permitted. Did that answer the question sufficiently?
Yes.
Okay. All right. Then just briefly, taxes. Nobody likes taxes. Nobody likes to pay taxes. And given the news that we heard out of Washington today, everything that I'm saying about taxes here may not apply next year. So I'll really just go through this briefly. Just say taxes are high. We want to try to you minimize taxes. You don't illegally avoid them. You just seek to legally minimize them. Having multiple properties, you have the opportunity to gains in one property, losses in another property. They can offset your income. Generally, properties held for investment purposes. If you don't have other income, you can't offset your losses against your ordinary income. If your day job from investment properties, you can only offset it from gains and income from other investment properties. Taxation, I think we could probably skip the taxation because we talked about the C corporation, S corporation, and then just we want to go to the taxation on the limited liability company. In this, I just referred to the payroll taxes, where S corp may be beneficial over payroll taxes, but it's a pass-through entity. LLCs don't pay taxes; people pay taxes. The LLC will issue K1 to its owners, and the owners will pay the taxes. Some entities, if you hold it in an IRA, if an IRA, there may be some negative effects to the extent you have losses, unrelated business taxable income, or tax losses that some investors or some investment vehicles don't like. But that really on an individual by individual basis that you'd want to talk to your accountant about. You don't, and if you're holding it individually, you don't worry about any of this stuff because it's just on your normal tax filing on a separate schedule. Moving to the next slide, entity type summary. This I'll just, to the extent you want to review it later, this is entity type summary. I prepared this for a venture capital investment group, people who are seeking investment capital. So it's not entirely for real estate. But it may have some information that you find of interest. So to the next slide, where it's a cartoon, we can hold it there for a while. And just you know, life isn't like we expect it to be. Between now and our goal, there's going to be ups and downs. Having an insurance in place, talking to an accountant, having a team like the Done For You has for you will make that road smoother and not as rough as reality can sometimes be. And then just some things that I just wanted to point out, some things that I'm not specifically talking about today that if you need additional advice on, you should talk to your own attorney or your own investment advisors. I referenced that you may have other individuals owning the real property with you. And in the event that you're owning property with more than, it's not just you, it's one or two other people, then in almost all of those situations, it's going to be better to have an LLC or some sort of entity. If you're using other people's money to make investments, and let's say you're doing all the work, somebody else is putting the money in. And I see that a lot. And where that's the case, you're offering a security and you need to comply with securities laws. So we're not discussing securities laws, but just know that if you're using other people's money, even with your own money, you just need to discuss what the securities laws impacts may be and make sure you're complying with those. As Kevin pointed out, you know, he's not giving you investment advice because he's not a registered investment advisor. I'm not giving you investment advice either because I'm just an attorney. So don't take anything that I've said or that's being said here as an investment advice. Everyone should consult with their own attorney for legal advice. I'm providing general advice to you generally, not specific advice. So to the extent you want specific advice, you'd want to speak to your own attorney or to me separately. Same with investment advice. And then just risks. There are risks to consider. Risks, you know, as the between here and the end, it's not smooth. You know, there can be adjustments to the real estate market, just like there can be adjustments to the stock market. Just be aware of the risks and make sure that you've considered the risks. If you want, you can go to the last slide. And this is what I imagine if the camera were to pan the audience now, we might find one or two of you awake. But this has my contact information, and just want to see if anyone had any questions. I realize now that I talked a lot faster than I normally do, and hopefully I used language that was English and not some derivation of it. So if anyone has any questions, I'd be happy to answer any questions.
Okay, great. Thank you very much, Brad. We really appreciate you being on tonight and taking time to speak with all of our clients. And we'll let you get back to your family. Have a great evening.
Okay. Thank you all. Good luck. Thank you.